16 to 18 months outlook isn't long term. Where will gold be in 2030 or 2035? It has always been my minimum target that gold will reach $5,000, let's say before 2030. But I think gold will be much higher when we will reach $3,000, because if gold is at $3,000 per ounce, our average gold related investment will be up 2, 3, 400%. So we will be happy with that. I think gold will witness this revaluation process that might take a few years to play out, and then you might see gold at 8,000, 10,000, or maybe even higher.
Gold surged 18% between March 1st and April 12th, rising around $400 and hitting new all-time highs on escalating Middle East tensions, record central bank purchases, concerns over sticky inflation, soaring U.S. government debt, and continued fiat debasement. Willem Middelkoop, renowned for his visionary leadership, is the mastermind behind establishing the Commodity Discovery Fund. In Willem Middelkoop's analysis, a profound shift is unfolding within the global financial system, a process he terms the reset, extensively discussed in his book, The Big Reset. He anticipates a revaluation process that could see gold reaching up to $10,000, or even higher in the coming years, potentially yielding substantial returns on investments. The latest Kitco News Weekly Gold Survey showed retail investors increasingly losing faith in the precious metal, while analysts and institutional players see this week's consolidation as a harbinger of further gains. With the manipulation of precious metal prices and the shift of physical gold from west to east, Middelkoop underscores the significance of ongoing discussions between Wall Street executives, U.S. officials, and China. This signals potential negotiations at the highest levels, amidst mounting concerns over the sustainability of the current financial order. The Chinese government's true gold holdings are more than double the official numbers, and the country's sovereign and citizen purchases have made China the dominant force in precious metals markets, according to a new analysis by Gainesville Coin's John Nieuwenhuis, published on Thursday. At the forefront of Middelkoop's discourse is the resurgence of gold, particularly notable since early 2016, amidst stagnant precious metal markets. He correlates the amplification of geopolitical tensions, fueled by events such as the COVID-19 crisis and the Ukraine conflict, as precursors to a hybrid world conflict. Now we present the clips of Willem Middelkoop's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The reset process has started. And what do I mean with that? In 2013, I wrote a book. It's called The Big Reset, The War on Gold and the Financial Endgame. And the thesis of this book was that gold will be revalued at some point by market forces or by central bankers, and gold will come back into the monetary system as a monetary asset. A new war, you could say, between the West and the rest of the world. We see the BRICS countries, the BRICS alliance, starting to fight the Western dollar system, the paper dollar system. Of course, we know that gold and silver prices were always manipulated through the paper futures COMEX system, LBMA system. And now gold has been moving from west to east in the last 15 years. And I think it's no coincidence that we see many Wall Street executives traveling to Shanghai, and also some important members of the US government traveling to China. It's no coincidence that the Chinese aren't visiting the US, but some discussions are being done at the highest level. And we all know that the US just can't continue with growing its debt 1 trillion in every 100 days. So people are starting to look at the anti-dollar, and that's gold. And we see massive amounts of trading at the Shanghai Gold Exchange. If you were watching this space carefully, you could see it coming for the last 10 years. And don't forget, gold was trading just north of $1,000 early 2016. That was the bottom of the whole precious metals and commodity space. And especially after the start of the COVID crisis and then the Ukraine war, the geopolitical situation got very tense. We're in the very early innings of a hybrid, well, world war or world conflict. And this is a totally different conflict compared to the 1940s or the First World War. But there is this monumental shift in which over 140 countries tell the US they are fed up with the Western double standards. They are fed up with Western hypocrisy. And now with the conflict in the Middle East added to this, it's a very explosive situation. And many institutional investors will never invest in gold unless there's a threat of war. And I think some prominent sovereign players, central banks, are adding a lot of gold to their reserves. So not only China, not only Russia, but even a country like Poland is growing their national gold reserves 10x.
Regarding China's increasing influence, including shifts in trade partnerships and the expanding BRICS alliance, Willem Middelkoop suggests challenges to the US dollar's dominance as the world's reserve currency. He also notes the significant breakout of interest rates from a 40-year downtrend, signaling profound changes ahead for the global financial landscape. Speaking at the New Orleans Investment Conference, technical analyst Jim Rickards elaborates on the concept of a gold-backed BRICS currency. He suggests that if each BRICS currency unit were equivalent to 1 ounce of gold and the price of gold reached $3,000 per ounce, the value of the BRICS currency unit would correspondingly increase to $3,000. This scenario implies a devaluation of the US dollar relative to the BRICS currency as measured by the weight of gold. Shifting his focus to recent market developments, Middelkoop delves into the breakout observed, especially in precious metals and mining stocks. Predicting ongoing growth, he highlights March's double-digit return and foresees more such months ahead as the recovery period progresses. Let's get back to the interview.
Well, if you look at the conflict in Ukraine, where you have the sanctions against Russia, look at the map of the countries applying those sanctions. It's just the West. It's North America, it's Europe, and a few other countries. If you look at the war in Gaza, who is supporting the Palestinians? Who's supporting Israel? It's the same divide. The Western powers are supporting Israel, and all the other 140 countries who are not joining the West in sanctions against Russia are supporting the Palestinians. And most of these 140 countries have China as their main trading partner. Compared to 20 years ago, it was the US. So China's influence has increased quite a bit over the last 10 to 20 years. And when we look at the development of the BRICS alliance and which countries are joining, Saudi Arabia joined, the United Arab Emirates recently joined. So this is also the end of the petrodollar deal, in which the Saudis promised to never sell oil in another currency than the US dollar. So the existence of the dollar as the sole world reserve currency is at risk. And that's why we see these large changes. Don't forget, we saw a breakout of interest rates from a 40-year downtrend, which started in 1980. So it was not a question if gold would break out this sideways pattern of the last 4 years, but only when. And now it has broken out with a powerful move, and much more is to be expected. Last time we spoke, I think we discussed that we were just waiting for this breakout. It was just a matter of weeks or months. And now we have this breakout from this 4-year sideways pattern, which had a bottom around 1700 and had resistance at 2000, 2100. So now we have this powerful breakout, but that has only happened quite recently. And look at silver. Silver stocks are just breaking out for the last 2-3 weeks. And we all know from past cycles that it's first gold breaking out and silver will follow, and then the shares will follow, and especially the smaller junior shares. Sometimes they have a lag of a few months, but our fund is up 20% from the low in the last week of February this year. So the recovery has started, and on average in a recovery year, our fund goes up 70, 80, 90%. So 20% in the first few weeks that's a normal recovery, and you can expect more to come. March was a double-digit return month for our fund, was plus 12%. On a normal recovery year, we have 4, 5, 6 double-digit return months because most of the recovery still has to play out.
Following the rally, major banks have upwardly revised their gold price outlooks. Citigroup is now calling for a gold price of $3,000 over 6 to 18 months, while Goldman expects gold to hit $2,700 by the end of the year. UBS has upgraded its year-end target to $2,500 an ounce. Given the forecasts of major banks and the factors driving gold prices higher, do you believe gold will continue its upward trajectory? And how do you see this impacting investment strategies shortly? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.